So our first speaker for the day is from an investment group, S2G, out of Chicago. I've had the opportunity to actually get to know Aaron a little bit by phone calls and some other exchanges, but I can tell you that the reputation that S2G is building in the food and agricultural technology investment community is like none other. And Aaron's background is steeped in the venture capital and investment world, and he is bringing that talent now to investments in food and agriculture. So I'm happy to have Aaron with us today, so please join me in welcoming Aaron Rudberg to the program for our opening discussion.
We are approaching the tipping point. As the population continues to grow, the food systems of old are becoming less viable for consumers and the planet. People now seek more healthy and sustainable food. And as we realize that we have a finite ecosystem, consumers are making deliberate choices that are forcing dramatic changes in our food system. Fortunately, visionary farmers, scientists, entrepreneurs, and investors are responding. And the future of food is happening as we speak. These visionaries are finding new ways to work with Mother Nature, to harness the biological ecosystem that has been honed for billions of years to realize modern opportunities from soil to shelf. S2G Ventures was started to take a systems approach to investing, with the goal of finding and supporting those that are transitioning the food system to meet the changing demands of the consumer and our planet. At the beginning of the supply chain, scientific innovations are improving soil health, both indoor and outdoor, using genetic coding, biology, and botanicals, while data science and fintech are improving efficiency, yields, and risk management. Along the supply chain, companies are making identity products like organic easier to procure, whereas others are reducing food waste and increasing transparency and traceability, while novel, wholesome micronutrients, prebiotics, and identity-preserve ingredients are becoming the modern natural pharmacy. Innovative businesses are increasing the options for complete proteins from plant-based sources, producing animal proteins from more sustainable methods, working to reduce sugar from our diets, and increasing access to local foods for on-the-go or at-home consumption, giving consumers more choices for healthy options. It will not be one innovation, one product, or one kind of consumer that proves critical in this movement, but rather supporting a system change. It won't be easy to realize or scale, but nothing worthwhile ever comes easy. The future of food is promising. Join us.
Thank you. Good morning. So appreciate you listening to the video we have on S2G. So we are a food and ag venture fund based out of Chicago with offices in Silicon Valley as well. We've been around for about 5 years, and our focus is on investing in leading food and ag technologies and behind entrepreneurs that are really changing the food system. And I'll get into a little bit of detail on why we think today's environment is ripe for innovation and disruption. We are, as the video talked about, looking at the food system of the future. So thinking about, as a venture fund, we think about how things are going to be in 5 or 10 or 15 years. And then we look for entrepreneurs that we can back that are really across the entire value chain. So that's a little bit of a different approach that we have than a lot of other venture funds. We look at the entire supply chain and what's happening at different points along that supply chain. And then we look for friction and look for a systems-based approach of where we can invest behind ingredients that maybe help some of our brands. So for example, yellow pea is something that consumers are demanding. There's a lot of brands right now that are trying to incorporate yellow pea into their products. So we'll look further upstream at where we can invest to try to drive the supply side, a little more efficiency there. With this lens, we're also an impact-oriented fund as well. So we look at some of the big challenges that we have as a population and where we can invest, again, behind entrepreneurs that are really aligned with us in trying to both improve the system, but also meet the consumer demand, particularly millennials, and I'll get into a little bit of detail there on some of the slides that we have. We are living in an age of significant changes in market share. This slide talks a little bit about what's happening today in a couple of different areas, particularly around the impact of Asia, online, as well as some of the largest companies in those changes over the last 20 years or so. As you look at the physical world, though, there's significant changes as well. Solar and wind is a bigger part of our environment today. Electric vehicles have been adopted, I think, much faster than a lot of people thought. We're now talking about autonomous vehicles and some of the innovation happening there. But this isn't only in that part of the sector. I think what doesn't get as much discussion, at least our world, is around the food industry. In 2017, really over the last 5 or 10 years, the consumer has driven significant disruption across the entire value chain. We invest a lot with large strategics, big companies in the food system, and many of them in their boardrooms are talking about this changing consumer and the impact that's having on the food chain, the food value chain, which was historically built to produce low-cost calories, consistent, safe products globally. Today, though, there's this rising consumer demand around things like organic, natural, clean label that's really disrupting that chain and forcing a lot of companies to really look at how they can innovate, and it's allowing entrepreneurs to really grow as well. As we look at some of the data, and I'll go through these fairly quickly, out of 900 food and beverage brands, 88% that have been added to shelves over the last 5 years, 88% came from small and medium-sized companies. On top of that, 90 of the top 100 brands out there have been losing market share since 2015. I mean, that is massive change within, again, a lot of these large corporates on the CPG side, how they look at their product portfolio. 68% of consumers today, almost 70%, are willing to pay more for food and beverages that don't contain undesirable ingredients. So people will look now at ingredients and they're looking for things that they know, and this is forcing, and also it's forcing companies to adopt, and if you think about how they adopt standards around clean label, and they have to go further upstream and say to their suppliers, their ingredient suppliers, the farmers potentially, I want to understand what's coming through the entire chain, putting pressure on companies like Cargill, Bunge, Ingredion, et cetera. Sugar, as we all hear about, whether it's in the new diets that you hear about, but added sugar is really something that is at the top of the list of most of these ingredient companies. I was on the phone with one of the largest ingredient companies yesterday, and sugar reduction is their #1 priority in terms of their ingredients. And for the last 30 years, that they've been one of the leading suppliers of sugars to all the big CPG companies. But they're now seeing, I would argue a little bit late, but they now have kind of bumped up to the top of their list that they have to get in front of this because they thought this was a fad, but this really is a trend that consumers are looking for less sugar in their products. The perimeter of the store. So the way people shop today is much different than it was 5, 10, 15 years ago. The perimeter of the store is where all the growth is. If you look at large CPG, they are focused on the center of the store, shelf-stable products. They really do not have much access or product within the perimeter of the store, yet that's where all the growth is. So that's presenting challenges as well. 95% of single urban households are willing to pay more for local. You talk to consumers and what they'll tell you is local is one of their top 3 attributes that they're looking for. Very difficult to do that if you're an international large CPG company. It's why you see farmers markets growing as fast as they are. Online is becoming a very big part of the portfolio as well. Amazon's obviously acquisition of Whole Foods has completely disrupted that market. I always think this is an interesting stat. For the first time, the percentage of U.S. shoppers who purchased antibiotic-free, natural, organic meat and poultry exceeded those who did not. And this isn't, from a venture fund's perspective, we don't have judgment on any of this. It's more of where's the opportunity, and are these fads or are these trends? And for us, this tells us that this is a trend that's going to continue. Consumers are voting with their pocketbook. So retailers and manufacturers now know agriculture is also being changed. If you look at ethical claims on packaging, animal welfare standards, There's a lot of misinformation out there, but these, again, are seeing growth. And the reason they're seeing growth, again, is because the consumer pull. The number of products containing pea protein, this is a big area of growth right now. And you see companies like Cargill making major investments in businesses like Purus. Roquette is building a large, several $100 million plant in pea protein in Canada. Pea protein is one of those ingredients that's not only good for the soil from a regenerative ag perspective, but it's also a growth area that consumers are looking for in their products. At the same time, soy-free claims, everyone may have heard, but soy is sort of the enemy like sugar today, where if you look at soy in a lot of products, it's getting reformulated out because consumers don't want soy in their products, which puts, again, stresses on the system. Biopesticide sales, while low, generally are seeing significant growth compared to more traditional pesticides. There's a significant amount of investment going into biopesticides at the big ag companies right now. If you talk to ag retailers, they're seeing significant growth there as well. And so that to us is exciting. Between 2015 and this is probably even today, sales of organic crops increased by 23%. I think many of us in this room probably know the data around, if corn is at, let's say, $3.50, $3.60, organic crops are trading at somewhere between $9 and $12 a bushel. And so that to us is arbitrage, that if we can help farmers take advantage of that with whether it's financing or crop insurance, things like that, I think you can help the farmer get a little bit more of the upside there. Regenerative ag was something that was headlined at Expo West. Expo West is an event that's held every March in Anaheim that historically, it's been around for 35 years, was the natural organic trade show that attracted everyone in the industry. Whole Foods really grew out of that trade show. This year, there were 85,000 people, up from 60,000 the year prior. It's become the major conference for food innovation now. All the big CPGs are there unveiling products. There are a number of big ag companies there, which I thought was interesting, for the first time seeing that. But regenerative ag was one of the major initiatives. In particular, General Mills made a lot of noise there because they announced a direct-to-farmer program where they, and we were very involved in helping structure this over the last 2 years, they announced buying 35,000 acres in North Dakota, doing a deal directly with the farmers where they're now going to start telling that farmer story on the Annie's Mac and Cheese box. So if you go buy an Annie's Mac and Cheese box, you'll see the farmer who actually created that product. And what they found is that they can actually get not only an increase in price from that, but they can actually generate more market share, increase their market share based on that as well. And so that's, when a company like General Mills, which has a massive supply chain, is looking at disintermediating companies like Cargill and Bunge, we think that's, significant change. I think these next couple ones are a little bit hard to read, but I think it's pretty interesting. If you look at, this is the loss in market share by large CPG over the last few years. And in particular, at the bottom there, it talks about 16 CEOs in large CPGs that have been either resigned or been fired in the last 2 to 3 years. That number is about 18 of the largest 20, given a couple of changes that have happened more recently. That is, again, massive innovation and change in the industry when 18 of the top 20 CPGs have replaced their CEOs here in the last 2.5 years. And the reason for that is because market performance has lagged the S&P 500. We're in a bull market, yet large food companies are struggling. So with so much disruption, everyone must be investing. And so what I think is both exciting for us, but also more disappointing, is that food and ag does remain an underinvested sector relative to GDP. The food and ag industry is one of the largest in the world, yet it doesn't receive the amount of venture capital and funding as more, what we all know, sort of tech and healthcare in terms of risk capital. That's changing. There's a lot of investors coming to this space, particularly the large corporates. So again, probably not a surprise that when you're replacing your CEOs, when your market share is going down, you're looking at these consumer changes, one of the easier things to do is set up a venture fund. And so a lot of big food companies have done that, both on the food side as well as on the ag tech side. And so we have invested with a lot of these groups. We've invested in 37 companies total, alongside of about 45 corporate partners as well. And that, for us at least, provides a lot of insight into what they're thinking and how they're trying to adapt in this changing marketplace. I thought I'd finish the presentation, just talk a little bit about some areas that we're investing in, just to give you a sense of what is, at least on the forefront of the industry, at least in our view. There's a lot of different pockets, but these were some of the ones that I thought were at least a little more interesting. Supply chain transparency is a priority. In the last few weeks over the Thanksgiving break, we heard about romaine and turkey challenges, in particular around just the products and pathogens and other problems. You go talk to leaders in the industry, they can't actually pinpoint. I mean, that's partly why the romaine sort of safety issue was raised, and they made a nationwide recall, essentially, is because they couldn't pinpoint where that problem started. And that's because there's really no traceability in the system. Once things pass through the multiple points, checkpoints, people can't trace where products are coming from. And so that's changing. Companies like Bunge, Cargill are starting to invest. Walmart is demanding blockchain technologies so they can trace products back all the way to the farm. And so that's, I think, an exciting space where we're seeing a lot of innovation. And that is part of the reason why you're seeing indoor ag take off as well, because there's traceability there, also with companies like Shenandoah Growers, Aero Farms, Plenty, et cetera. So this is an area that we think is ripe for innovation. We see probably 2 to 3 business plans a week in this space. And I could, again, talk a lot about blockchain and both the positives and sort of some of the fake news out there. But blockchain and traceability is, I think, a major wave that you'll see over the next 10, 15 years. Plant-based foods, another area that we are very excited about, and I think we're at the beginning stages of this. And part of this is the growth has been significant. One of the more exciting things, at least for us, but I think the industry is, you look at Beyond Meat they recently, one of the first plant-based products, recently filed for an IPO. I think that is exciting from a food industry perspective to get a food company out there that's going public, particularly one that's in the plant-based category. I think we'll see then what consumers' appetite is and shareholders' appetite is for a plant-based public company. On the right-hand side there on the chart, the far right is the growth of yogurt. So if you look at yogurt as a category in the grocery store, it's about a 3% declining category. Yogurt, because of Chobani and others, was growing for a few years. The last couple of years, it's been going down as a category within grocery, and plant-based yet is growing at 30% within that space. And so grocers are now looking at taking out products that are dairy and replacing them with plant-based. The channel's also being disrupted. I'm not going to focus as much on the last mile, which is what probably a lot of us experience with, whether it's Peapod or Amazon, and Walmart and Kroger and others have solutions in that as well. I think it's more interesting on the first mile around the farmer and the role of the ag retailer within this space. And so this is sort of where I'll wrap up. But the digital ag and the relationship between the ag retailer, the input providers, and the farmer, I think, is going through massive disruption right now. There's leading companies like FBN, Indigo, that are changing the way that farmers interact with their ag retailer. We believe, and we talk to a lot of these ag retailers, they are in their boardrooms talking about this change. They're talking about new business models. How should they react to that? We know a couple of partners that if you mention Indigo or FBN in their board meeting, you have to put $20 in a pot. And our view a little bit is that that's not the right approach. That's more of a defensive posture. But these are companies that are, whether they survive or not, time will tell, the markets will tell us. But that change should force ag retailers to reevaluate how their agronomists and their service model is interacting with farmers in a low commodity environment specifically. And so I think that is very exciting for us. We think that the ag retailers that really adopt digital ag and figure out ways to wrap that service in a profitable way for farmers will be able to build that trust and will be able to withstand some of this competition from Pipeline, Indigo, FBN, and others that are out there. And you've seen some of this with Nutrient buying Agribul and others. There's some M&A going on there that I think is pretty exciting. So with that, I'll finish. I think it's exciting to see the change that's happening in the food and ag space. It is something that we live with, live every day, sort of talking to entrepreneurs and look for ways in which we can continue this disruption in the overall system. And I know after this, you'll meet some of those entrepreneurs that are on the forefront of this. And so thank you, AgriNovus, for having us, and happy to take a few questions.
Want to seat?
Sure.
Have a seat. I think we've got a few minutes while maybe some of you are collecting a thought or two. Aaron, it's interesting to hear you reference the next panel. We do have 4 entrepreneurs in this ag tech, Agbioscience space who are coming up next. You might, if you haven't exchanged cards already, you might give those out because they might be looking for funding relatively soon. Yeah, maybe they've already come and pitched. Give us a little bit of advice, right? Or talk a little bit about that side of, you've described the landscape for us, but now you've got to make a decision around an investment. What are some of the criteria or the most important things you look for from a group of entrepreneurs, much like we're going to hear from next, that are important decision points for you to be comfortable with an investment in a new tech or a new startup?
Yeah, so we understand food and ag. So we're, I'd say we have a slide that sometimes we show that talks a little bit about how this industry is very different than SaaS or tech industry, and that you have to be patient. So as investors, while we have a 10-year fund, that's typical in this business, we are a fund that has the ability, because of our LP base, to extend that another 10 years if we need to. And a lot of times, the closer you get to the farm gate, you need to be patient, because farmers don't just adopt technology rapidly. And so I think the first thing I'd say is we're, at least for a lot of entrepreneurs, we like to believe that we are on your side, we're entrepreneurial centric, we try to be patient. But at the same time, what we're looking for is that entrepreneur. I mean, it's sort of talked, maybe overstated, but it's so important, is that entrepreneur, that executive, the founder, in a lot of ways, is someone we want to get to know and spend a lot of time with. We want to understand that they are, confident in what they're doing, but they're also humble enough to know where their maybe soft spots are, or they need help, and they surround themselves with people that help them execute that. That to us is really important. One of the things we do at our organization, just to ground us and remind us, is we bring in an entrepreneur every month that's sort of a leading entrepreneur that's sold their company, typically for 500 million plus, and across different industries. But we interview them for an hour and a half to our group internally, just to remind us of how difficult it is to start a company, build a company, hire the right people. I mean, it's you're basically a problem solver every day, and so that. We try to spend a lot of time with the entrepreneur, getting to know them, and then there's obviously things like integrity, trust. I mean, but I think you've got to really believe in that entrepreneurial vision, and feel like we can trust this person during the highs, the lows, sort of all that.
So don't forget, there's microphones. I'm not seeing people come to the microphones. It's our first session, so we need to get you rallied for some questions if you have them. Talk to us a little bit about the rest of the food and ag tech investment landscape. I know you've sort of described and walked us through S2G, and not necessarily asking for specific references to other funds or other groups that are out there, but are you seeing a lot more development of new funds, and are there particular ones that are finding unique niche spaces in investment? Can you kind of talk about that landscape a little bit more?
There's it's not a big market, so we're friends with a lot of people, because you have to find co-investors for a lot of these companies. And so we try to build relationships with a lot of both the strategics, as I talked about, but also importantly, like-minded venture firms. So I'd say most funds are in this space, and there's probably, it's growing because we're in a good market right now. But, most funds are either ag tech focused, we find, or they're brand focused. So on the ag tech side, you've got groups like Finisteer, Cultivian, Open Prairie even a little bit is more closer to that side, that are investing, 2 to 10, 15 million on the ag tech side. You then have groups on the brand side that are like Kavu, VMG, that are very focused on how do we scale a brand that's got 5 to 15 million in revenue to 50 to 100 million in revenue. And they've been great partners for us. We've, we're seed, early, and growth stage, but a number of these groups we've taken to, maybe that 10, 15 million of revenue and then gone to a VMG or Kavu, and they've helped us accelerate the growth of that company. So typically, though, I think it's important from an entrepreneur's perspective, make sure you know who you're talking to. So you're not going to a VMG or Kavu and trying to pitch them. I mean, they may not like that I'm saying this, but I think because they probably want to see everything, their domain is not necessarily an ag tech farmer-focused tool. And I'd say vice versa with the other folks I mentioned. And the other thing is, we see, indoor ag is something that we joke internally. We probably see an indoor ag business every 2 days. We're invested in one. I think that's the other thing, know what that fund is invested in. We're always impressed with an entrepreneur when they have done their homework, that we're not just another group that has, capital, which we probably are, but we'd like you to, act like you have done some homework on us a little bit. But it's, I think understanding the landscape in the market is important.
Great. Question.
So Aaron, you're based in Chicago. What would you say is unique about the Midwest as opposed to the entire opportunity landscape across the country for ag and food investing?
Yeah, so we invest across the country. I think, Midwestern, I'd just start with the people, to be honest with you. I think that maybe it's because I'm a Midwesterner as well, but you do notice a little bit of a difference in the sort of the people that we're investing in the Midwest, kind of the work ethic and that integrity, I think. It's just maybe a little bit easier for us to get comfortable because we have similar values. I also think, this is row crop America, right? And so people in this part of the market or in this part of the geography just really have an understanding of what that farmer is dealing with. Again, we have a number of investments in Silicon Valley, San Francisco. Some of those are focused on row crop, and I think they even recognize that they're missing that footprint in the Midwest just to be closer. So a number of those companies have pivoted and are focusing on produce and more specialty crops because they feel like they have a better way to get access there. And they have trouble, talking with maybe that farmer that's, managing 5,000 acres of corn or soy. So I think for us, it's always important to sort of understand the person's background and experience and kind of where they come from.
Great.
Thank you.
One last question.
Hi, Aaron. I have a question. What are you guys doing in terms of diversity, trying to reach out? Because I always look at these, this ag tech growth, right?
Yep.
How do we get more diverse entrepreneurs, diverse companies? Because there's big market shares out there for growth. What can we do as entrepreneurs to support your organization to start changing these numbers so we have more diversity in these rooms?
Yeah, this is a big issue, challenge facing, I would say, just the general venture tech industry. Not specifically in ag, but it's also prevalent in food and ag and in the company. So from a S2G perspective, we've tried to encourage diversity within our own group. I don't have the data offhand, but it's somewhere around, I think, 50, about half our team comes from diverse backgrounds, maybe a little bit more than that, actually. On the entrepreneurial side, we've got about 35% of our entrepreneurs are not white males, just to be very sort of blunt about that. For us, that's not good enough. We actually held a summit last year, or earlier this year, where we, one of our panels for an hour, it's a summit with our network, essentially about 250 people, leaders in the food and ag space. And this was we actually exposed all of our data and talked about ways we can get better in front of kind of all of our friends. It's a little bit, it wasn't the most comfortable thing, but I mean, it's something we need to do better at. What we're trying to do is, when we look at entrepreneurs and the ones we're backing and supporting and the organizations we're supporting, we try to use our capital to support things that are not, sort of the typical white male, to be honest with you. I mean, to be very blunt about it. We're supporting organizations that are encouraging internships. So in the investment world, even at my last firm, it starts with you've got to have interns that are female and minorities. And bring people, because it's a mentorship business, you've got to bring people through. And you can't just expect to hire, at least at the venture fund's perspective, a partner or a vice president that's a female or minority, because if they're good, everybody's trying to hire them. And so the funnel's not big enough at the senior levels. So what we try to do is support interns and associates that come from diverse backgrounds, because then they move on in their career. Hopefully they move up, and then we can continue to, and hopefully we've done a good job, and they become a part
Quick
of our
follow-up
family.
question. So,
Super fast.
Yeah, what can entrepreneurs do to support you to get to that goal?
That's a good question. I would say, if you have friends that want to be an entrepreneur, encourage them. It is so easy, even in our business. We believe in sort of stoicism, that you can't get too high or low. You've got to just sort of be sort of in the middle. And I think if you have an entrepreneur who's a female or minority and they're having a tough time, obviously feel free to introduce them to us. We'd love to talk to them, but more importantly, encourage them through the difficult times. Put your arm around them. They may not work out, but they at least learn something, and the next time, hopefully it gets better, because it's so easy to kind of fall out and be like, I'll just go back to a big corporate. Not that that's not a good decision, but I think the lifeblood of our economy is all about entrepreneurship and small companies. So I'd just say encourage them and help them out.
Great. Thank you very much for taking the time. Everybody, please join me in thanking Aaron. Thanks very much.
Thank you, Bob.
Appreciate it.